Hi, my name is Matt Walsh. I'm the founder and CEO of Splish Naturals. I recently attended Carl Dakin's Motivated Money Bootcamp. As my company begins to launch its crowdfunding campaign for upwards of $3.5 million, I can't say enough about the class, what I learned, and how much I recommend it to any business looking to raise capital.
Have you ever wondered what it takes to successfully raise money? I have worked with hundreds of capital campaigns across dozens of industries, and I'm here to share with you proven methods for raising money in record time and at the lowest cost, while also obtaining capital at the lowest price. My name is Carl Dakin, and welcome to Motivated Money. Hello, this is Carl Dakin, and this is the Motivated Money Podcast. This is a show where we primarily focus on helping entrepreneurs learn how to raise capital. We talk about the motivated money approach that I've developed to make that easier, quicker, faster. And typically we talk about what's a new technique, a new method, anything along that line that would give an entrepreneur a better idea how to strategize, design, and present their capital campaign so they get their capital goal over and done with and get back to doing business. So today I have with me Adam Jason, who actually sits on the other side of the fence. He is an investor, and we're going to explore this from his eyes and how he looks at making investments so that you can see that there is a rhyme and a reason to how you go about raising money. So Adam, if you would give a little introduction of yourself, your background, and your firm.
Sure, Carl, thank you for the opportunity to be with you today. My background by trade, I'm an attorney, practiced in the U.S. for about 10 years before coming down to Colombia, South America, where I'm talking to you from today. So my practice was SEC, corporate finance, doing IPOs, raise a lot of money in both private and public markets on the debt and equity side, primarily for Fortune 500 companies and also the large banks on Wall Street. Now down in Colombia, I sit as a partner of Legacy Group, which is our own investment firm. And we basically, our strategy is to serve as, call it a bridge between Latin America and US-based high net worth accredited investors. So our client base, we have about 400 high net worth investors. We've brought about $55 million of capital into Colombia, and we invest in businesses that we build ourselves. So our flagship company within our portfolio is called the Green Coffee Company. Started back in 2017. It's now the largest producer of coffee in the country. We're in our Series C funding round for that business. We're also invested in a company here called Polygonus, really the leading digital arts and design academy here in Colombia. So we try to, I guess, put a U.S. face, U.S. background to Colombian operating businesses with future goals of expanding more broadly in Latin America. So the conversation, we can do it any way you want. I can look at it from the investor side of things, but also have raised a lot of capital and continue to do so for the businesses that we operate.
So let's start with the investments you're making. You describe those as you're building your own investment opportunities.
Yes.
What's guiding you in selecting these opportunities and deciding that that's where you want to place the money?
Yeah, I mean, starting from the business building side of things, like I said, our first business here in Colombia, Green Coffee Company, started back in 2017, really built it as from the start, an alternative to commercial real estate for investors who are already comfortable with Colombia. They were investing in commercial real estate, short-term rentals, et cetera. And we saw an opportunity in ag that was appealing to our investor base because they like collateralized assets, they like cash flow, similar to commercial real estate property. But what we saw as we were building the business was really the enterprise value that could be created by building a business rather than a project. all of our businesses that we create or share with our investors, we always put a large amount of our own capital into first. So for the coffee company, for example, we have about 2.5 million of our own investment dollars in the business. Polygonus, the tech company that I shared with you, we seed funded them. We're kind of watching them in the coming years to see when they're ready to take to outside investors. But our strategy really is build businesses that have enough potential upside where you can get US-based investors to, I guess, make the leap into a market that they might not be as familiar with, or that they might see as potentially more risky than buying commercial real estate in Miami, for example.
Well, right now it's an interesting challenge.
Sure.
So I'm interested in one of the ways you framed your answer. You said you're looking at businesses as opposed to real estate projects.
Yes.
And there's a key distinction there. I'd like you to kind of illuminate or clarify for people understanding why that's a different type of investment and what's important about that.
Yeah. I mean, if you take a real estate project, let's say it's going to be a hotel. If you're just building one hotel, it has an upside to it. You're going to be able to project potentially the cash flow that's going to trade at a cap rate in the future, but you're not building any long-term, I would say, enterprise value, meaning, you can't get multiples on your money. Usually, if you're building, a standalone commercial real estate project, et cetera, even when you pool them together, something like REITs, you're not getting a lot of multiples like you would get if you're building a business where you're adding in technology, adding in multiple revenue channels, expanding the organization into different jurisdictions. My background, like I said, is really seeing companies go from, call it the startup phase, but usually more, farther along the line than that, and getting to that IPO, and really to see kind of big returns on investment, you have to create something that has a promising future versus an upside that everybody can basically project. And that is, I'd say, I guess it's ironic use of the term for what we're talking about, but has a roof on where it can potentially go, versus a business that continue to grow as long as you nurture it, really to kind of an unlimited amount.
A lot of people like real estate investments and projects because it's a highly collateralized type of investment, but
Yes.
it does have a ceiling or cap. You can only
Definitely
make so much money during a given period of time unless you happen to be in the last, in the right bubble here during the post-COVID,
That's right.
where everything jumped. And
That's right.
having a business, depending upon the business and its potentiality, you could see the moon on that.
Right. Yeah. I mean, you can create businesses that are potentially infinitely scalable versus something that is a fixed asset that has really a fixed market cap.
So to realize the potential of a business over real estate, how long do you have to stay in it as an investor? And do you have an exit plan to get out of the investment in part or in whole?
Of course, there's no fixed timeline. Companies can take a couple of directions. It can be, okay, this is going to be a business that is designed to cash flow and is going to utilize very little debt, is not going to issue a ton of equity, and we're just going to grow it organically. You can have a business that scales rapidly because it's bringing in a lot of outside capital. It could potentially be a business that is a sales target for an acquirer. It can be a business that's, going the IPO track. So it really depends, I think, what the goal of, call it the founder or the business leader, is trying to achieve with their business. We try to grow businesses that, again, balancing, and I think this is important for people raising capital, is to understand the audience. What is the return profile that your investors are going to want to see to justify venturing away from, I used the example of investing in Miami real estate earlier, but literally just buying an S&P index fund and doing nothing for an extended period of time. What can you deliver? What value can you add over and above that other people can't? For us, being out of the country, being in different jurisdiction, asset class, we look for multiple returns on multiple multiple multiples on your capital versus, call it an 8%, 12% fixed return like you might see in a real estate project. So that means we have to grow our businesses quite quickly, but also not at a reckless pace. So for example, the green coffee company, which I mentioned before, we started 2017. Call it the promise or the goal for our investors has been to get to an exit, or call it a liquidity event where they can decide whether to sell their shares, continue in the business, etc., by 2026. So we're looking at like a 9 to 10 year timeline, which is, I would say, if you look at like Airbnbs of the world, Uber, that's about the timeline from founding to IPO/exit.
So, in the motivated money approach, I work with entrepreneurs to try to emphasize everything that an investor might get out of an investment in addition to the return on investment.
Yeah.
And sometimes this takes on what was called impact investing or other types of investing. So when you put your deals together and you're looking to raise capital, what can you offer beyond simply the return that is attractive to bring an investor, as you say, out of the United States and down to Central America?
Right. Some of our investors honestly invest because they are excited about the business. Maybe they do it because there's a lifestyle element. They come down to Colombia, they go to the farms, they touch and feel the plants, they see the infrastructure. So there's that component to it. People like, I think, to be investors in private businesses because there's a little bit more of a connection to the ownership group. It's easier to get your questions answered than if you're investing in Apple, for example. But principally, people invest for the financial returns. There's the whole movement now around impact investing, ESG. I think that if you're in a business where those things are important, which I think in many cases most are, obviously in agriculture, what we're doing here, or when it comes to employment and things like that, all of those I'd say are drivers of value and not the reason that people invest directly. For example, we make a promise that we are going to comply with all of the UN sustainability goals. That's important to companies like a Starbucks or Nestle who may want to do business with us, where if we don't do it, we risk not doing business with them, but of course, limiting the value of the business that we're trying to create. So they're necessary drivers to creating value. But I honestly don't know a single investor that we have who said, I'm investing with you guys because I like the impact aspect. If the financial returns weren't there, it would be irrelevant.
So your investors, are they individuals, private equity funds, family offices? Where's the money come from that is looking for the type of investment that you're offering?
Yep. As I mentioned, we have about 400 investors to date. All of them are high net worth accredited investors, usually in the $3 to $50 million net worth range. I'd say, we have some that are 100 million plus, but in that range on average, about 90% US based. We have some Colombian investors where we are here. We have some folks out of Europe and Australia. But my background, the background of my business partner who I work with at Legacy, he was with PwC. I was a practicing attorney in the US. That's the market we know and the audience that we can really speak to. So we work with US folks who are interested in LATAM, and it's all the accredited investor, high net worth folks. We stay away from, I'd say, the institutional investors for a couple of reasons. I'm happy to share those with you if you'd like me to.
Yeah, I would like to. I'm curious.
Yeah. What we found is same thing. If an institutional investor is going to veer off the path of investing in US based, although we're a US based company, US based operation, non-US based operations, they often want big control stakes. They want to have their hands on the business, and it just doesn't work for how we do things. You get financial minds that come in and maybe they add value, but they've never been to Colombia, nor do they know how to spell it correctly, nor do they speak Spanish or know anything about what's going on here. So it takes time. It would be irresponsible of us to kind of hand the business over to those kind of individuals. And that's usually the ask. There's not a lot of passive investment that we've seen from an institutional perspective. Of course, they look to try and get the best deal, which anybody would, when it comes to valuations, et cetera. But honestly, we enjoy creating businesses for the people who we see are truly excited about them, that want to come down and spend time with us here in Colombia, go to the farms. We're not really interested in making a bunch of money for Apollo or TPG or any of these funds. And they're doing fine without us.
So you were talking earlier about a cash exit, and a lot of entrepreneurs overlook that or don't plan the exit. So the entire investment that they're offering is a little bit undefined, and
Right.
the time length and everything is there. So when you put together an exit, what do you do? How do you go about crafting that so that you can give the investor you're working with a more tangible, definable type of an opportunity?
Yeah, I would say let's take the IPO path, for example. I mean, if you're going to look to list on the New York Stock Exchange or NASDAQ, there's certain check the box requirements you have to meet in terms of likely market value, shareholder count, number of shares, but really it's about being organized. You're going to have to meet audited financial statement requirements. You're going to have kind of a leadership team and likely a board of directors that markets are willing to take seriously. So if it's just a one-person operation, it's going to be very hard. You got to surround yourself with the right people and really anticipate a couple of years in advance. You might very well need 2 or 3 years of audited financial statements. So it's not a let's do this tomorrow type thing, which I think everybody knows. But anticipating that, getting the right legal counsel involved, working with true accounting firms that markets are going to take seriously, because otherwise it'll be a flop. If you don't have names that people recognize, it won't look professional. Especially if you want to list on the larger exchanges. There's all these sub markets which are possible, et cetera. But the same thing, if you're going to try and sell a business to a real acquirer, if you want to do business with, if you're in the tech space, you want to do business with Microsoft, or you want to do something with Apple, they're going to be, I'd say, meticulous about checking your financial information, the due diligence that they do. Hopefully, we've seen things like the FTX situation and all that I guess leave some outliers. But I think, if you're really going to put your best face forward and try and get the max value for your investors, you have to have those things prepared. The biggest weakness we see, like when we look at companies from an investment standpoint or adding them to our portfolio, is just the organization, little things like communication, correct data, and really knowing their market, all these things that say, all right, this is a credible company, this is a credible group of founders that somebody would actually want to invest in, and that isn't gonna flop immediately.
So when you position an exit through acquisition, how do you go about putting a price tag or value on that particular company or project?
Yeah, I mean, a lot of times the buyers will tell you what they're willing to pay for it, right? And then you're going to have different industries that have standard valuations. It might be a certain multiple on EBITDA. Some industries like SaaS companies will trade on multiples of revenue. So it's really understanding kind of what the range is for your market. And of course, if you've made, call it, promises to your investors or where you think you're going to go, finding the right buyer who appreciates that value that you've created. If part of the value is the impact investment or ESG, making sure that you have all the documentation you can show that makes that important. I think one market trend that we're seeing and that we're going to look at, on a grander scale here in the near future is with all of the ESG reporting that's going to be, I think, mandated by the SEC and regulators, you're going to have a market for companies that can serve as suppliers, providers for larger enterprises that need to be able to make those reps and warranties in their disclosures to the SEC, et cetera. So if you can really separate yourself by having that in good order and actually complying with the standards, you're creating more and more value there that can differentiate yourself in the market. So, most industries are going to have a baseline multiple, just like real estate would have cap rates that you're going to see assets trading at. And then it's about why should somebody pay more than what the market standard is, or why shouldn't they pay less than what the market standard is if you're not doing those things. So it's knowing your market.
Yeah. So do you ever set up exits where you do buybacks or some other mechanism to cash out an investor because you want to keep the company going beyond the point of the exit?
We talk about it, like for the coffee business, for example, we could potentially do a recapitalization down the road. And I saw that quite a bit when I was working as an attorney for other companies. You could see special dividends near the time of an exit. You could see buybacks, etc. But the businesses we create, we don't, I guess, factor in any kind of unique events. It's really we're positioning for a sale, we're positioning for an IPO. Let's see what optionality we have as we move down the road.
I've noticed that it's a common challenge for a company that intends to be acquired down the road, that sometimes I will say they don't do everything they would do if they're planning to be there for the long term. Mm-hmm. And it's almost like an anticipation, well, that's going to be somebody else's problem, so I don't have to worry about it.
Yeah, that's not a good strategy. That's not a good strategy. I mean, people are just any smart buyer is gonna, if they do any reasonable diligence, will likely find out about issues that you're trying to hide. So, I mean, just do it correctly.
Yes. Okay. Yeah. If two different companies came to you who had what looked like the same rates of return, how would you go about choosing between the two if you're only going to fund one?
And they do the exact same business?
Similar, similar enough. Let's just put it that way.
Okay. Yeah, I mean, I would start with the management team. Do I like these people? Do I think they're credible? What's their track record? Do they really like the business? What are their motivations? Where do they see the business going? What's their long-term plans? It's really, it would be a bet on people, probably even more so than the return point that you mentioned. But taking all things as being equal, it comes down to the team that's going to run the ship.
How big of a team? How diverse of the skill set? How would you, I see a lot of businesses, particularly the ones I'm working with, they're too much Lone Ranger, too much couple people working together, which doesn't really come across necessarily as a great team. It might be a building block, but it's not quite all there. Right. What kind of advice would you have to someone about getting their team in shape and up to professional standards, so to speak?
Yeah, I mean, I guess depends what kind of size of the organization is that we're talking about. Like right now, for our other companies that we want to add to the portfolio, we're really looking for established businesses that have a track record. But if you're making, call it startup or seed funding type investments, you're gonna want to see obviously the execution ability of the team, somebody who can generate sales for the operation, that they have somebody in place who's managing the financials, that there's an ability to manage project and meet client demand. So I think it's tough and we stay away from it because it's really most end up losing is a pure startup where it's one person that's coming up with a business. We want to see some kind of operating history and actually see the team able to deliver on its brand promise and manage all those diligence items. If you're going to look at a company and say, let's see the financials, and they don't have any, well, then there's an issue right out the gate with the team they have in place and processes and all those kinds of things. So we stay a little bit away from the pure startup mode, which takes some of the risk away, but it does, you could potentially lose some of the return, but we'll sacrifice some of the return for a little more stability.
For sure. So you're focused in a particular geographic region. Are there opportunities where a U.S. company might expand or extend or create a satellite operation in your neck of the woods that would be something that you would be looking for or you would find attractive?
Definitely. I think the market opportunity here in Colombia in particular, but LATAM in general is massive. You have a young population that is growing. You have a lot of traditional industries like banking, real estate, lending that are 50 is probably understating, but 50 years behind in terms of how you'd be used to something operating in the US. So a lot of the businesses we see growing up here can and many times be copy and paste operations from what you'd see in the US. We'll have a service here similar to Amazon. We'll have a service here similar to Uber. We'll have a service here similar to Grubhub or Uber Eats, whatever, so there's a lot of replication in the market, but also there's a huge, I'd say, growing middle class that gives businesses that are looking to be more multinational an actual customer base that they could leverage. So for sure.
I think a lot of people, United States seems to be particularly what they call the ugly American, which I think was a term came up in the 50s, still carries over to today, where we don't know much about anything outside of the boundaries of the United States. And sometimes I'm not even sure we understand the United States. It would seem to me, that in any country like the ones you're working with, that there would be some companies who are going, I should look to that place rather than in my backyard for growth and expansion.
For sure. I mean, you're going to have less competition. The reason our businesses, our greatest competitive advantage is there is no competition. So if you have access to capital, if you can take kind of a dated industry like agriculture, like coffee, like education, and I guess apply some international, or I call it real world, but it's probably just not the best use of terms, but a more international perspective towards how things are run, and look to scale things versus how do we save every possible penny, and just a bigger mindset, I would say, to some of these industries. And there's so much opportunity.
You're basically, I think, opening some eyes for people who may be thinking too much with blinders about U.S. domestic markets.
Sure.
How would they get a hold of you if they wanted to talk to you about maybe working with you in your part of the world?
Sure. So if anybody's interested in the coffee business that I mentioned, we're in our Series C funding round. Started at about 25 million of equity, and we're down to 4 million. So there's still room for people to participate, depending on when this podcast is released. But by email, you can find me adam.j@legacy-group.co instead of .com, or you can find me on LinkedIn, and I can connect with anybody there. But we'd love to have more investors on board, folks who are interested in LATAM. Of course, have to be accredited, but projecting some good return profiles, building some special businesses, and of course, just happy to connect with people who are generally interested in the market or may want to continue this conversation. Always enjoy having it.
Thank you, Adam. I very much appreciate your being a guest here this morning on Motivated Money Podcast. And thank you to all the viewers who listened into this episode. Adam, just for your information, you're the first time we've had an investor on my program.
Okay.
And so I'm very appreciative of getting your perspective and how you look at investment opportunities. It's something that anybody who's raising capital needs to become familiar, as you described it, with the specific nuances, the verticals, the expected standards on what people are looking for and prices that they're willing to pay. And all these just show that, a lot of homework's necessary before you go out to raise capital.
For sure. For sure. Thank you, Carl.
Thank you for listening in to Motivated Money. If you like this or any other episodes, make sure to leave a rating and review the show. We love to hear your feedback and want to make this the best possible show for you. Also, if you like this episode, make sure you share it with someone you know who is seeking to raise capital. They will appreciate learning what you now know about raising funding. I'll see you on the next episode of Motivated Money.